Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard. John, what's coming up on today's show?
Well, we're going to talk about a new metaphor for how we should look at the resource sector, resource juniors, and we're going to talk about Canalaska Uranium, which I've restored to my favorites collection.
John, why do you think the AI dream will not suck the oxygen out of the resource junior room like the dot-com bubble did back in 2000?
Now, I attended the PDAC this past week after doing the Metals Investor Forum conferences the 2 days before. The PDAC floor was very crowded. PDAC reported just under 27,000 delegates showed up. That's short of the sort of near 30,000 that showed up before the bear market started in 2011. But it was still quite impressive, though it was kind of puzzling because there's been a disconnect with this the number of people at the world's largest mining conference and what we've been seeing in the market. And I had a kind of deja vu flashback to 2000 when I was at the PDAC and the dot-com bubble was peaking and the resource juniors were caught in a bear that incidentally did not end until 2003 when the China super cycle kicked in. And now we're looking at the AI dream, NVIDIA, $2 trillion market valuation. And I'm sort of thinking, this is just like before. The resource juniors really cannot compete against all these AI startups, any one of which can be a winner-take-all type of a success story. So the sky's the limit. Whereas with the resource juniors, no matter how fabulous a deposit you find, it does have an upside valuation limit. Even if it's $2 billion, it's not going to go to $2 trillion. So this has been something that really hurt the resource juniors back in the dot-com bubble. Of course, the limit is because a mine has a life, say 20 years, 30 years, and its value is the discounted cash flow generating a net present value. That's your upside limit. So when you have these juniors looking to make new discoveries, and you contrast them to all these AI startups that are going to be looking at all these different organic and inorganic molecules that are going to be spewed out by AI, researching them, coming up with a brand new applications in the biomedical field, the agricultural field, energy efficiency, and even processing technology, and you can't compete with the juniors. But I gave this presentation at the Metals Investor Forum. It's now online, in which I talk about my two themes from the past 2 years, which just don't seem to have resonated with the market. One is the geopolitical conflict between global West and East, and the other is the requirements of the energy transition. And if this conflict between global West and East gets hot, which is entirely conceivable given all the noise we're hearing about Putin's willingness to drop a nuke on Ukraine if he doesn't get his way, the West's dependency on China and Russia metal supply is going to haunt the global West. There is a vulnerability that everybody has their head in the sand because they're assuming that globalization will reassert itself and all the metal will come from these dirty jurisdictions and keep the GDP of the global West, which is 60% of global GDP, going. And of course, with the energy transition, the problem has been that the boomer generation is reluctant to make the sacrifices needed to achieve the energy transition because they won't live long enough to find out whether it will make a difference at the end of the day. So neither of these two themes, which I think should be driving interest in the resource juniors, one to come up with new supply in secure jurisdictions, and the other to come up with the additional metal supply needed to make these net zero emission goals a reality. And then I'm looking at this AI dream coming along, and then I start hearing all the chatter about how much energy consumption AI computation requires and will require when it really starts going. And then, of course, I started to think, well, they're going to have to expand the energy infrastructure and the grid massively. That's going to crank up the national debt. But nobody really wants to do that. However, the boomers who control most of the capital, they stand to benefit within their lives, maybe even extend their lives through biomedical achievements. So we may get a buy-in, whether it's Trump or Biden that wins the election, to crank up the national debt to remake America's energy infrastructure. And then I started thinking, well, the younger generations are going to turn out to be the ones who object. They're going to say, you're going to saddle us with all this debt that you will not live long enough to have to deal with in 2040 and beyond. Well, you get a buy-in from us only if you include energy transition goals with this infrastructure renewal. So we have a scenario where we have all three themes coming together and potentially lay the foundation for a resource junior bull cycle. And when this all starts to happen, they're going to call up Rio Tinto and ask questions like, when can you increase copper supply 50%? And the answer is going to be maybe 2040. And they're going to say, oh, that's a problem. How are we going to make this happen, especially in places like Canada and the United States? And interestingly, unlike the China supercycle, which was all about dusting off these deposits found in places like Latin America and Africa ages ago that didn't quite make it for a variety of reasons back then, but in the context of the higher real prices created by the China supercycle, were suddenly in the money. And that cycle was all about feasibility demonstration. It attracted institutional capital. They could crunch the numbers. They knew what the upside limit of this was. And that kind of reversed the stigma that had infected the resource juniors during the dot-com bubble, where they just couldn't compete with the sky is the limit. No, the sky is not the limit, but you can quantify it. You can use outcome visualizations and models to project what it would be worth if the deposit is delivered. In this case, the deposits were already known. You simply needed to do cost discovery. This time around, if you're looking in Canada and the United States, there aren't these old deposits lying around that you can dust off. There are systems that were discovered in the past and that were never really properly followed up. So that's the new game. But this is a discovery exploration game. So the president is going to say, well, if we can't call the majors to get anything done, maybe we should call the resource juniors. And this is why I've been assembling this big bottom fish collection of all the real companies. There's about 1,500 resource juniors out there, but only 20% of them are real. The rest are these lifestyle fake companies that have zero chance of finding anything. I've been gathering all the ones that are real into my collection, and I think we're going to see suddenly these juniors become the salvation warriors for securing replacement supply when the global East supply evaporates, and also to deliver the new supply needed to make all these energy transition goals reality. And I mapped that all out in my presentation at the Metals Investor Forum, which is available now online. The PDF for the slides is also available. But it was afterwards that it occurred to me that we need a new metaphor to distinguish these resource juniors from these AI startups. And that's when I was reminded of the California gold rush. Now, the California gold rush, all these gold seekers came through San Francisco, heading to the American River to make a fortune. Any one of these 49ers could have become fabulously wealthy. And until they didn't, that was the way it was. And the AI startups are like these gold seekers heading out to the gold fields. The resource juniors are much more like the outfitters of picks and shovels in San Francisco. Now, they got rich, but you could also quantify how rich they could possibly get. And that was a function of how many 49ers were coming through San Francisco to head to the gold fields, and how long would the gold fields last and deliver their bounty of gold. Now, we know with a metal like gold, there's going to be a finite limit. But if you take this metaphor and look at these AI startups, there is no limit as to what the AI machine can start cranking out in terms of innovations and game-changing breakthroughs. So now we have these resource juniors. They have their upside limit. The deposit might be worth $500 million, maybe $1 billion, maybe $6 billion. They're all priced super low as if they are part of this dying ecosystem, which is what I had been thinking until a couple of weeks ago, until I had this epiphany about how much energy is going to be sucked up by the AI dream. In fact, so much energy they will probably ban Bitcoin mining, which really accomplishes nothing except to facilitate crime, like the $22 million payment the hackers got for shutting down one of America's health systems, and of course it chews up electricity and is really just a wealth transfer mechanism, doesn't accomplish anything. Wall Street, of course, is totally behind this, and we've seen Bitcoin make a new record. But we've also seen gold make new records, even though the GLD continues to lose gold, which means that the retail people, they are abandoning gold and heading into the Bitcoin of mirage. But if we have all this geopolitical dislocations happening, Bitcoin just refers to itself and is priced in US dollars. So that's not really a hedge against the world starting to move away from the US dollar, whereas gold is an independent asset class. And I think there is some serious money, some whales out there who are not retail investors who are buying gold because they see disruptions coming that's going to make everybody rethink. And we're still kind of in a bear market with regard to resource juniors, but I think we are close to an awakening, and we're going to see 500% increase in the valuation of the real juniors to a level where they are viable, and then they're in the running for making 5-10 baggers. Now, that's not like the 1,000 baggers that you're going to get from an AI startup, but the AI startup stuff, everything is just hype. It's just momentum gambling. It's for people who don't really want to think. They just pick their favorite, and as long as the trend is the friend, it'll keep going up. Resource juniors are for critical thinkers, not those people at the bottom of the belief horseshoe who are true believers and don't want to think about anything. No, the resource juniors are fundamental outcome gamblers. They need to think about what the upside limit is, what the evidence is pointing that it would be in terms of different deposit outcome scenarios. And of course, with like using my tools like my rational speculation model, you can price what it should be trading at now, given the stage and the data that's in front of you. And the data keeps flowing. So the resource juniors are for a different audience, an audience that has kind of disappeared. But since the vast majority of the audience is heading into the AI startup dream, we only need a small portion of that audience to shift their capital into this resource junior sector. And the majors, they've eliminated their exploration departments. Even if they try to rebuild them, they just aren't as good as juniors to go in there and sniff out these old systems, start doing basic data gathering. And this is another important thing. You cannot have these clown show lifestyle companies do anything because you need technical people who get paid real salaries, who know how to collect data, how to integrate it into a digital form and start studying it and then make recommendations for more data gathering to build up the hypothesis. And the new exploration model will not be to just identify some geophysical target and set up a sniper kill shot. No, you're actually going to be drilling geological scout holes simply to gather information about the geology in the third dimension so that you can start vectoring towards where the prize with size is going to be. And there's going to be a lot of thinking, too, about the scale of the system. Is this a large enough footprint to host a world-class deposit as opposed to something little? And even if there's something little, there are subtle clues. It could be a tentacle of a giant deposit that was poked at ages ago by former explorers, but now it is something complete. You start looking deeper and start thinking, what is this potentially related to? So we're entering a new era after a decade-long secular bear market for the resource juniors that I think is going to make heroes out of all these resource junior zeros that everything has ended up in the past couple of years. So the California gold rush is the metaphor. The resource juniors are the pick and shovel outfitters who are going to enable the AI dream startups with their goals as the picks and shovels facilitate the energy infrastructure expansion and renewal so that this AI dream can go to its fantastic limit that everybody thinks it can do. So in the past week, I've gone from being fairly despondent about, where's this sector going, to suddenly having a vision why I think we're going to flourish in a very big way.
Why did you restore Canalaska Uranium to your favorites collection?
I got quite excited about Canalaska Uranium in the summer of 2022 when they intersected high-grade mineralization similar to Eagle Point in the basement at a substantial depth, 850 meters or so on their West MacArthur property, and they've been chasing these high-grade deposits, MacArthur-style deposits that are at the unconformity. MacArthur itself was about 1 million tons of 16% uranium and U3O8, but when they started wedging last year, I made them a favorite for 2023. When they started wedging, they couldn't quite figure out the geometry of the zones that are in the basement. And these are structurally controlled zones that are like dancing squirrels, twisting and turning all the time. And the stock kind of slumped. And at the end of the year, I said, okay, we're back to bottom fish status, hoping that we really get a discovery. But on February 28th, they published a press release of a hole that intersected almost 17 meters of almost 14% U3O8, within which there was a 4.7 meters of 40%. Now, these are these radiometric equivalent measurements, and if you've got a properly calibrated instrument, which of course the Canalaska team, which is ex-chemical, would have, those are quite reliable, except when it gets this high, they actually understate what the geochemical assays are going to be. So it's the thickness of this this intersection and the fact that the grades are going to be even higher that really got the market's attention, and it jumped from sort of the 45 cent level to the 75 cent level, where it's now stabilized after being knocked back to 65 cents because there were a bunch of people nattering, 800 meter deep, that's never going to mine. That makes no difference. MacArthur's 600 meters deep. They use remote controlled robots to mine this stuff. Add another couple hundred meters, no big deal. If you had an basement hosted vertical structure thing that you're supposed to chase down another 600 meters, that might be a different issue. But the important thing about this press release was that the intersection was at the unconformity. And the unconformity is where the sandstone from the basin sits on top of the crystalline basement. And this is where big structures go through there. And with these structures are the fluid paths by which the uranium is harvested from the sandstone above and recirculated. And within these structures is where graphite piles up, and graphite reduces the uranium out of the fluid and creates these big deposits. Now, they're not big. They're actually tiny deposits. They use the term a string of pearls. But the fact that it was at the unconformity, this means that with their wedge drilling, they now have at least one of the dimensions that they can track, which is the direction of the conductor at the unconformity. And so they now have the drill wedging towards it. Within a couple of weeks, they could hit the target. The crew they're using has become very experienced in terms of guiding with precision to a target. So the market right now is waiting for confirmation that the delineation drilling, which sort of failed to, get anywhere last year when they were chasing the high-grade mineralization in the basement, that they now have a handle on it. And this play goes from groping, trying to find where does this stuff go, to systematically delineating the high-grade mineralization at the unconformity. And I decided, okay, I reran the numbers. I'd done in 2016. I'd done a MacArthur clone outcome visualization where I had put in the numbers I scavenged from the Cameco disclosures, and I took all those cost numbers and escalated them by 25% and reran the model. And of course, in the context of $91 uranium today, if they were to deliver a MacArthur type system, a series of deposits at the unconformity totaling a million tons, running say 16% on average, and you mine that at 200 tons per day, the value at the current price with an 8% discount rate would be about 8 billion Canadian, which implies a $32 price. Now, of course, you can't go there right away. You need to actually start delineating it. But with a valuation of about just under 200, between 150 and 200 million for an outcome that big, it is still good speculative value in the context of the rational speculation model. And this is the important thing in question one. This is a pick and shovel story. It's never going to be worth more than $8 billion. That's the upside limit. It may end up being smaller, but it's still going to end up being a source of picks and shovels for the nuclear industry, because the Key Lake facility needs more ore. So if Canalaska does delineate a deposit that's somewhere between a couple of 100,000 tons to a million tons of this high grade, it's going to end up becoming feed for the Key Lake mill in the Athabasca Basin area. So this is why I took Canalaska off the bottom fish list, where it was like a 40-cent bottom fish. It had almost doubled. This is supposed to be the concept. My subscribers, they would have accumulated Canalaska while it was this bottom fish with uncertain timing about when it's going to have that missing piece, namely an emerging discovery story, become reality. They would have bought this. They're up. Now it's at a level where it's still good speculative value, but it's high profile. And this is a stock which could go from, could be a 10-bagger from this level. And if the extreme outcome becomes reality, it could end up being even more. But again, look at a 5 to 10-bagger from these levels happening in the near term. It's not like an AI startup. It's like a San Francisco pick and shovel outfitter story. And that's why I've put Canalaska Uranium back into the favorites collection.
John, thank you so much for the update.
You're welcome, Jim.
I'm Jim Goddard.
Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.